For centuries, gold has glittered as the undisputed champion of investments. A symbol of wealth and stability, it's been the go-to safe haven for nervous investors weathering financial storms. But is its reign on the verge of collapse? A challenger has emerged from the digital shadows. Bitcoin, this revolutionary currency, is shaking the foundations of gold standard, forcing a critical question. Is gold about to be dethroned? This video will take a closer look at Bitcoin and gold, breaking down their pros and cons to see which might be the better investment in the future. For millennia, gold has held a cherished place in human history. It's a tangible asset you can hold in your hand, with established markets for buying and selling. It's also known for performing well during economic downturns, acting as a hedge against inflation. Inflation is the gradual increase in prices of goods and services over time. This means your money buys less over time. Adding some gold to your investment portfolio can diversify your holdings and potentially reduce overall risk. However, there are also drawbacks to consider. Securely storing your gold can be expensive. You might need to pay for safe deposit boxes or secure facilities, adding an extra layer of cost to your investment. There is also the risk of theft, so proper storage solutions are crucial. Another downside is that gold's physical form makes it difficult to buy and sell in smaller amounts. Imagine trying to split a gold bar to make a quick purchase. Historically, gold's returns haven't been as high as some other investment options. While it can be a stable store of value, it might not provide the explosive growth some investors seek. Please remember that this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Like the video to give us a boost and share it to help others make a better decision. Bitcoin is a relatively new player in the investment world, but it's seen explosive growth in its short history. This digital currency offers the potential for high returns, which can be very appealing to some investors. Unlike gold, Bitcoin is highly divisible. You can buy and sell tiny fractions of a Bitcoin called satoshis, similar to cents for dollars. Satoshis allow for more flexible investment options, making it easier to buy smaller amounts of Bitcoin. Anyone with an internet connection can participate in the Bitcoin market, removing geographical barriers to entry. No matter where you are in the world, you can buy and sell Bitcoin with relative ease. Bitcoin transactions are secured by blockchain technology, offering a high level of security. Blockchain is a decentralized and secure ledger for recording transactions. Imagine a giant public record book that everyone can see but no one can tamper with. This makes it very difficult to counterfeit Bitcoin. However, Bitcoin also carries some risks. Its price is known for wild swings, which can be nerve-wracking for some investors. The price of Bitcoin can fluctuate significantly in a short period, making it a volatile investment. The regulatory landscape surrounding cryptocurrency is still evolving, which can create uncertainty for investors. Governments are still figuring out how to regulate cryptocurrency, which could introduce new rules and restrictions in the future. Understanding and securely storing Bitcoin can be challenging for new investors. It requires familiarity with digital wallets and cybersecurity best practices, which can be a learning curve for those unfamiliar with the technology. While both gold and Bitcoin have a place in the investment world, there are some reasons why Bitcoin might be a more attractive option for some investors. Bitcoin's limited supply and increasing adoption suggest its value has room to grow significantly compared to gold. Unlike gold, where new mines can be discovered, there is a finite amount of Bitcoin that will ever be created. This scarcity could drive its value up in the future. The ease of access to the Bitcoin market can be a major advantage, especially for new investors. Unlike gold, which might require visiting a bullion dealer or jeweler, Bitcoin can be bought and sold from the comfort of your home. The technology behind Bitcoin, blockchain, offers a secure and transparent way to store value. Transactions are recorded publicly on a distributed ledger, making it difficult to tamper with or counterfeit Bitcoin. The significant price fluctuations of Bitcoin are a valid concern for investors. Bitcoin's price can be volatile and investors should be prepared for the possibility of significant swings. However, for those with a high tolerance for risks, the potential for high returns can be very attractive. Bitcoin's history suggests the possibility of substantial growth, even though it might come with some bumps along the road. The evolving regulatory landscape surrounding cryptocurrency is true, but the global growth of cryptocurrency adoption suggests potential for future mainstream acceptance. More and more businesses and institutions are starting to accept Bitcoin, which could lead to wider adoption and potentially more stability in the future. It's important to clarify that Bitcoin transactions are not completely anonymous, although they are pseudonymous. This means transactions are linked to a Bitcoin address, but that address doesn't necessarily reveal the identity of the owner. However, blockchain analysis can potentially trace transactions back to individuals or entities. Ultimately, the decision between Bitcoin and gold depends on your individual risk tolerance and investment goals. Risk-averse investors might find gold's lower volatility and established track record more appealing. Gold has a long history as a store of value, and its price movements tend to be less dramatic than Bitcoin's. Growth-oriented investors, on the other hand, might be drawn to Bitcoin's high potential returns. Bitcoin's limited supply and increasing adoption suggest the possibility of significant growth in the future. The smartest approach for many investors might be to consider including both gold and Bitcoin in their portfolio, depending on their risk tolerance. This diversification can help spread out your risk and potentially improve your returns. Some major companies are already taking notice of Bitcoin's potential. For example, Tesla and MicroStrategy have added Bitcoin to their corporate treasuries. This shows that some large institutions are starting to view Bitcoin as a valuable asset class. There is a common misconception that Bitcoin mining uses massive amounts of energy. While this can be true, it's important to note that mining process is constantly evolving. Newer, more energy-efficient mining methods are emerging that could help reduce Bitcoin's environmental impact. That's all for today's video. If you enjoyed this video, be sure to like and subscribe for more content like this. Let me know in the comments below what you think about Bitcoin versus gold. Would you consider investing in either? Stay safe and thanks for watching.